Hi, I'm Jeff Tucker, Principal Economist at Windermere Real Estate, and these are the numbers to know right now. 2026 is already proving to be a busy news year for the housing market, starting with our first number to know $200 billion. That's the total value of mortgage backed securities that President Trump announced on January 8th that he's directed his representatives to purchase, with a stated goal of reducing mortgage interest rates. A big new buyer of mortgages will tend to bid their prices up, which for bonds means pushing interest rates down. And for the last 3 years, mortgage rates have been unusually high relative to the benchmark 10-year Treasury rate, although that spread has been gradually compressing back to a normal range. And this buying spree, evidently by Fannie Mae and Freddie Mac, should accelerate that process of shrinking the spread. Markets have taken this announcement quite seriously. In just the first day of trading after Trump's announcement, mortgage rates dropped 15 basis points, bringing us to our second number to know right now, 6.06%. That was Mortgage News Daily's average 30-year mortgage rate on Friday, January 9th, and that marks the lowest mortgage rate they've reported in almost 3 years. Now, trading has been unusually volatile, and there are still a lot of unanswered questions about this new program, but there's no doubt that in the short term, it has begun moving markets. And I think some highly qualified buyers and sellers who start to see mortgage rates in the 5% range will be more motivated to transact this spring. Another number to know right now is 56,000. That is the number of jobs lost on net over the fourth quarter of 2025, capping a year of slowing and ultimately shrinking payrolls in the U.S. economy. Now, other data shows economic activity and growth held up okay in the fourth quarter, so this is not the beginning of a recession necessarily, but slowing job growth could help explain why home purchases disappointed in the fourth quarter, despite lower mortgage rates than in late 2024. Now, speaking of housing, 2025 ended with the housing market still just shy of an important benchmark I've been watching, that moment when active inventory recovers to its pre-pandemic 2019 levels. The year ended with just under 1 million active listings, versus just over 1 million 6 years ago on the eve of the COVID pandemic. Now, that is still up substantially from this time last year, but the trend of year-over-year listing growth clearly slowed over the course of 2025. That helps explain why 2025 went down as the year of cooling and normalization, but not anything like a fire sale or a glut of unsold homes. Rather, it's a market that made a lot of progress back toward normalcy, foretelling a healthy, balanced market in the year ahead. All right, that is all I've got for this month, and thanks as always for watching.